Portfolio Builder members, welcome to Friday's Trade Alert. We're playing it safe again, writing a in-the-money strike on the SPY trade and a slightly above the strike price on the TBT trade. Let's just quickly look at some charts. S&P 500 continues to climb, and we've been very skeptical as the bond market's been pointing one direction and the stocks are pointing another direction. So most likely both of them are a little bit off their fair value right now. The TLT is selling off, and so I think the SPY will follow. Typically these are the opposite correlation, and right now they're following the same trend, which is completely abnormal and I don't think will last long. So perhaps TLT comes down a little bit, SPY comes down a little bit, and they go back into an agreement. So whenever we see the fundamental correlations break apart, that's always a good time to play it safe. So we had to buy back our 285 strike for a loss on the covered call, but we appreciated on our underlying asset. We don't lose if the market goes up. And of course, our biggest fear is losing money, so we're playing it safe at every turn. Now, even when we play it safe, with this current trade, we can still generate a huge return over time. So if we look at this one, let's look at the economics of how we make money, and I'll show you how this ends up with a 30% annualized return with a very defensive weekly, or rather Monday, Wednesday, Friday covered call strategy. So right at this very moment, the SPY is trading at, as you can see, last 288.27. And we can sell a 287 covered call, which means we're taking a $1.27 loss if we're assigned on the option contract. But the reason we do that is because we're taking in a credit of $1.69. So if you subtract the difference of that, we're looking at 52 cents per share times 100. So we can make $52 if we're assigned. That means if the SPY were to go higher between now and Monday, we get that guaranteed $50 profit. Let's look at what that adds up to over time. Now, if the SPY were to trade flat or down, we can actually earn a greater profit than just that $52. We'll make the 52 bucks plus some of the time premium that is eroding for the person we sold this call option to. Okay, so here's the math. If we have a $28,836 investment to buy 100 shares of the SPY ETF, and then we collect 50 bucks, which we're going to do at least $50 3 times a week. That's a 0.17% return, okay, that we're repeating 3 times a week, 52 weeks a year. So what does that add up to? It's surprisingly a lot. So if we have 156 opportunities to grow our portfolio by $50, now typically we'll go for bigger than that, but right now we're playing it safe because things are looking a little sketchy. Manipulated, I guess is the word. But if we just make that 0.17% interest rate from the covered call 3 times a week, 156 total times a year, that grows a SPY portfolio from 28,836, and if you compound all the profits into a return of 37,584.79. So if we look at the ROI on that, that's an outstanding 30.34%. Now you can't really compound the profits directly into the SPY until you have lots of 100. So let's just look at it from an income point of view. If we took a measly $50 and did that 156 times a year, how much income is that? That's $7,800 a year of income. And that doesn't count any appreciation in the underlying asset or any profits that we can make in addition to that baked into the cake spread that we're looking at if the market goes higher. So if it goes flat or down, our profits can actually increase between now and Monday. And if you are not in a current situation where you need to spend the income you're generating from this program and you do want to try to compound it, what makes sense is to take your credits and invest it into the TBT ETF. This is a long-term buy and hold where you can also do the covered call. So whether you want to just hold the TBT with the extra cash you're accumulating, or you want to actually get lots of 100 TBTs and do the covered call, that's where I would recommend stashing any cash you can until you get enough capital to buy another 100 shares of the SPY ETF. And so the return, even if you just take the cash out and just spend it for your income needs, still a 27% return. So it's very impressive. And our goal is not to just be so defensive and negative on everything, but I do think that there is a sell-off coming, and so we want to be playing the defensive strategy until we do get a sell-off. So in general, once we've had a sell-off, we'll be able to start writing the covered call above the trading price, and then we can be making in excess of $100 every Monday, Wednesday, Friday, plus over the weekend. And that's because we can write the covered call, collect most of that profit, and then also have our underlying asset appreciate. During this April month, we're looking for the $50 with the in-the-money covered call, giving us $1 to $2 of protection, and then we'll continue to roll that down and down and down if we get a sell-off. If we're wrong and the market keeps going higher and higher, we're still generating a nice return. And as you can see, the VIX continues to collapse, so our opportunity to go long the VIX gets better and better the longer we wait right now. We can use that covered call for a risk-free way to get a slight amount of protection in our underlying asset and still generate a great return over time. But once the market shows some fear, that's when we will enter a long call option on the VIX. And if things get even more hairy, we would look at the put options on the QQQ. But to get to the point of buying out-of-the-money put options on the QQQ, I'd want to see either the trade deal with China deteriorating, which it's not, or I'd want to see the Fed signaling that they're going to begin raising rates, which I think they will do by the end of the year. As the stock market will most likely continue to heat up, as we have now just all good news in terms of the China trade war and a very dovish Fed at the moment. Now, the other trade we put on today was on the TBT, and this portfolio took a little bit of a hit over the last few weeks. The change in outlook from the Fed dropped rates to extreme lows in a very short period of time. It's put a huge push into the real estate market because of the lower rates, and really been the boom in the markets. But I don't think that will last for much longer, and I think everybody's been rushing into the bond market, was doing it just speculating that they could make a quick buck. So once they realize they're a little late to the game on that, and then you've got Ray Dalio and Drunken Miller selling their bonds right now for huge profits, because I predicted this move last year, that this is all going to reverse. And we're already seeing it with the TLT finally starting to pull back, and I believe we're going to see rates start to rise, stock market slow down a little bit, and then get back into its normal correlation with the bond market until things get too hot. So just going back to today's trade alerts, the first trade was to cover our covered call, and again that was for a loss, but we made profit on the underlying asset going up, and we provided ourselves with protection during a time when the markets were making no sense at all. And today's trade is similar, not quite as defensive, because we're just working from today till Monday, so there's not an entire trading day where we can't manage this position. And so our best opportunity would be for the SPY to be trading around 287 next Monday, right at 9 when we issue our trade alerts, so, or 11 Eastern, that is. Worst case, drops way below that, which I don't think will happen. And an okay case is the market jumps up higher, hits that 290 that some people are betting on in the option market today. You can see of all the option flow, primarily there's a lot buying the 287 put. That's the dominant trade today, and why we chose that 287 strike when everybody has to cover. There should be some good support at that 287 level. On the other hand, we've still got speculators trying to double or triple their money by Monday, playing the trend, the momentum game, We can see a lot of people buying that 290 call option today. So that's our trade for the SPY. If we scroll down, we can see we're sitting on a 6% gain after covering last week's position, or rather Wednesday's position. And we show a bigger return after putting on the new covered call, but it's an in-the-money covered call. So I'm not going to show that P&L until we've covered it Monday. TBT is a very good long-term play if you think rates will rise, and that's definitely an outlook we have over here. Today's trade is to cover last week's, which was covered for a loss, but our underlying asset did go up in value slightly. We missed most of that jump by playing it safe, following the trend. Now we're following a reversal trend, so the strike is slightly above the trading price, so we can make some money on the underlying asset and the covered call. And we'll just roll this position over every Friday. This is a very, very long-term play that we're going to be doing for most likely the TBT trade. Will take 10 to 30 years for rates to completely reverse the course of the last 3 decades, which went from rates as high as 20% all the way down to almost zero. I mean, we had zero for a little while in 2008 till 2016 when they started jacking up the rates, and by 2018 we ended up in the worst bear market in a long time, with all global assets losing value in 2018. So the big question is, will the Fed raise rates at the end of the year if everything starts to heat up, which it is, and I believe they will. So we love this long-term play. It did take a small hit, but still profitable, and this is a very repetitive strategy. We'll continue to write this covered call right above the trading price, most likely till the TBT is trading in the realm of $45 to $55, and I think that's when it'll get to such a high rate that it can cause trouble for stocks. So now I'll just do a quick review of how the platform works so you guys know how to fill in your trades. You don't type anything into this area. If you want to add cash, it goes into the deposits area. These settings you can control to allocate capital. Your default setting is 90% on income, 10% cash. If you wanted to put some cash into the TBT, you could put this at 10 and then drop this to 80. And that's probably a good ratio right now so that you can play both of our strategies. Remember, the SPY trades Monday, Wednesday, Friday, the TBT only on Fridays. As far as how you keep track of your trades, your open positions get stored here, and then you just simply copy paste and move them down to here. And remember, when you see a closed ROI of negative, that means we made money on the underlying asset. It's when we have these 93, 98% gains that you got to ask yourself, what happened to the underlying asset? So it's a little misleading to look up and down this column and understand how we're generating our profit. So you write it up here and then you close it down here. And it's just a very repetitive process. The same thing with our TBT system. Okay guys, that's the wrap of today's Trade Alert. We'll have some news and charts and interesting information that's just breaking today on our live webinar, as well as a Q&A and a live demo. So I hope you can join our webinar today at 1 Eastern, and if not, we'll see you on Monday.